Q1FY22 earnings conference call of Vardhman Special Steels Limited, hosted by IIFL Securities Limited. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Urvil Bhatt from IIFL Securities Limited. Thank you, and over to you, sir.
Thanks, Rujuta. Good afternoon, everyone. On behalf of IIFL Securities Limited, I welcome you all to Vardhman Special Steels Limited 1Q FY22 results conference call. From the management side, we have Mr. Sachit Jain, Vice Chairman and Managing Director, along with his team. Over to you, Sachit, for your opening remarks.
Good afternoon, everybody, and thank you for joining us on our earnings call for the first quarter. On the call with me are Mr. Sanjeev Singla, our CFO, Sonam Taneja, our Company Secretary and Compliance Officer, Bridge Investor Relations team, and my daughter Soumya. Briefly about the first quarter. Of course, COVID impacted us because there were individual and partial lockdowns in the states. That affected sales. April started very strong, and then they got affected. In addition, we were diverting oxygen to supply to the city of Ludhiana. We were supplying at the peak almost 2,000 cylinders per day, more than half of the oxygen of Ludhiana. So that a bit. So those factors are gone now. The other big event of the last quarter is we finally got the environment clearance from the Ministry of Environment to increase our capacity from 200,000 tons to 280,000 tons per annum. In the first phase, we intend to increase our capacity to 250,000 tons by the end of financial year 23. Of course, this requires CAPEX. CAPEX process has already begun. So some equipment is going to come in by November. Some other equipment is going to come in later, and is continuously coming in till December of next year. We are also working with our partners Aichi to achieve better operational efficiencies, better quality, and safety. So we are also, as we shared with you earlier, that we will continuously work on our EBITDA on capital employed. 31st March, previous year we had 19.5%. This year we will target 22, around 22.5%. I mean, that's the kind of target we have. And by 2025, we expect to hit a figure of about 25%. So we will gradually keep moving upwards towards a 25% EBITDA on capital employed. On the EBITDA per ton, this quarter has been pretty good, but we continue to maintain that our range will be 7,000 to 9,000 rupees a ton, and this is a good year, so we will be at the higher end of the range. And in the previous quarter, you've already seen the results. There's no point in going about the results, or I'll ask at my end. But Singla, if you'd like to quickly share the highlights of the results, and then we can take on questions.
Sure, sir. Thank you. In the first quarter, we had 3,705 tons as against 47,828 tons in the Q4 of FY21. This we are comparing with Q4 of last year because the Q1 corresponding quarter of last year is not compared, which was high. And revenue operations in the current quarter is 330 crores as against 334 crores in Q4. And EBITDA, including other income for the quarter, is 53.71 crores as against 54.68 crores in Q4. EBITDA per ton for the quarter is 12,289 as against 11,433 in quarter 4. And Q1 profit, net profit after tax stands at 27.8 crores as against profit of rupees 26.36 crores in Q4 of last year. So that's all on performance side. Thank you. And now we are open for questions.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on the touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Chirag Sureka from VSSL Mutual Fund. Please go ahead.
Hi, this is Vivek Ramakrishnan, and thank you, and a very good set of numbers given the quarter. Could you just let us know whether there's been a build-up in inventory, how are OEMs looking at stocking, and whether material is moving across, because most of the OEMs and the auto sales also slowed down. So this would be very important for us. Thank you.
So if we look at how things are going currently, cars seem to be doing very well. Two-wheelers and heavy commercial vehicles are not doing so well. And the segment of auto component exports is doing very well. So that's also a decent part of our portfolio. Many of our customers are actually ultimately component exporters. So since the U.S. markets are doing very well and the exports which are targeted towards the U.S., they are doing pretty good. So the point to basically you'll be wanting to know how is the second quarter looking. The second quarter is looking okay, not roaring, but pretty decent. So we'll be meeting our budgets and our targets.
Okay, sir. Just as a follow-up, no unusual inventory build-up at your end or...
we have a shutdown coming in November.
Oh, that's right.
So that's a 15-day shutdown, and we were building up inventory. So there is an inventory build-up as of 30th June. However, we had a problem in Punjab. As you are aware, that monsoons were delayed and there were massive power cuts. So our plant was shut for about 10 days. So there was no power. So this was an unplanned, unscheduled cut. So we, luckily, since we had a lot of inventory, we have been able to use a part of that. And we might have to buy some billets from outside to load up our inventory to be ready for the November shutdown. So we are quite prepared for that.
Thank you, sir. Good luck.
Thank you.
Thank you. Ladies and gentlemen, to ask a question, please press star and 1 now. The next question is from the line of Aniket Redkar, an individual investor. Please go ahead.
Hello, sir. Good afternoon.
Good afternoon.
Yeah, and congratulations for the good set of numbers.
Thank you so much.
Yeah, sir, I have a couple of questions. So my first question, can you give breakup of black bars and the bright bars for this current quarter?
We don't share that breakup. But very roughly, our bright bars are about 15-20%.
Okay.
It's a very rough idea. Just give an order of magnitude, but we don't share the number.
Okay, sir. Sir, as we can see, the volume of current quarter is 43,000 tons.
Sorry?
For this current quarter, our volume is 43,000 tons, right?
Right.
So is this sustainable run rate for the next few quarters?
Yeah, so we have already said that we are targeting about 155,000 tons for the full year. So this is 165 to 170 or something like that we'll be targeting. So yeah, this is sustainable.
And what kind of production schedule we have received from the auto manufacturers?
As I said, we don't have the craziness that we saw last year, but still decent. We'll have a good quarter, second quarter in terms of volume. The problem, of course, is the raw material costs have gone up, and we have asked for a big price increase. So all depends on what kind of price increase that we will get.
Okay.
Normally, we used to have 6 monthly price settlements.
Okay.
Since this high volatility, raw material prices have come in, we have all agreed that we'll have 3 monthly settlements.
So, increase in the raw material prices, we are passing these prices to customers?
We are negotiating with customers, and those price increases are not settled. But we have asked for a price increase.
Okay. Yeah, sir.
We get the price increase that we are expecting, we're looking forward to. Second quarter also will be very good. If the price increase that we get is less than what we expect, it may not be so good. But even in the worst situation, if we get a zero price increase, it is still a decent quarter. And we have already said these figures of the first quarter, 12,200 EBITDA per ton, is not a sustainable number.
Okay.
So we have said that please judge us from 7,000 to 9,000 rupees EBITDA per ton. If we get more than that, that's a bonus.
Okay. Then how do you see the EBITDA per ton in the coming quarters? Because current quarter it is...
we believe it's in the range of 7 to 9.
Okay. And what is your export contribution for current quarter?
It's very small. It's increasing, but it's still very tiny. Second quarter is going to be more than first quarter, but it's around 5%.
Okay.
It's cool, but really the kind of sample development that's going on for exports is huge. So by 24-25, our target is to be 25% exports, 25 to 30% exports. So there's going to be a massive increase in exports.
Okay. So last question.
Those are being negotiated, good profitability, good margins.
Okay. Do we have added any new OEM recently?
There aren't too many OEMs, right?
And what about the demand coming from? I mean, from where we are getting more demand?
The demand is coming from all our major sectors. Two-wheelers is a little lower.
Okay.
Cars will make up and exports will make up. So we are second quarter is being fine from volume point of view.
Okay.
And ahead also we're looking forward to good times. It is just a fear of this third wave which is there, which may be keeping some customers away. So put it this way, second quarter of this year, of every year, we expect a major boom. So that kind of boom is not happening. But still the demand is good. If we had a major boom, we would not have been able to meet the requirements. So from our point of view, from Vardhman Specialties point of view, we are doing pretty fine from volume point of view.
Sorry to interrupt, Mr. Vekar. May I request you to please rejoin the queue, sir?
Yeah, sure.
Thank you. The next question is from the line of Abhilasha from Axis Bank. Please go ahead.
Yeah. Hi, sir. My question is pertains to your capex. So you said for the rolling mill, initially in the first phase, you'll be going to 250,000, right?
Yes.
And what would be the capex estimate for that?
The total estimated capex that we have announced is between 200 to 250 crores in the next 5 years.
Okay.
And that includes the investment for environment reasons.
Okay.
As well as it includes investment for some bright bar, which will not really increase the capacity. So for quality reasons, some buildings.
Is it possible to give a number for the...
All investments are going to be in the range of about 200 to 250 crores as we foresee it at this point in time.
Okay. No, since this first phase expansion, you said you'll be completing by 23. So that will be like a guidance for the coming year, the capex that you're doing. So is it possible to give a number for this?
Done by then. And there'll be some tailing off is continuous.
Okay. You don't have a number for this rolling mill expansion as such?
No.
Okay, fine. That's all.
Thank you. The next question is from the line of Devang Sangvi from ICICI Direct. Please go ahead.
Thanks for the opportunity and congratulations on a good set of numbers.
Thank you so much, Devang.
Thank you, sir. Firstly, I'd like to ask that recently the specialty steel PLI has been announced.
I'm sorry?
Specialty steel PLI has been announced by the government recently.
Yes.
And can you throw some light? How can we participate in this particular PLI? Which products?
So our products, automotive steels, the automotive powertrain steels are included.
Right, sir.
And what remains to be seen is the details of the scheme. So the details of the scheme are not yet out. So very difficult to comment whether it's an attractive scheme or not.
Correct, sir. We will be one of the beneficiaries of the same.
We can be the beneficiaries. All depends on what is the kind of scheme that comes out.
Right, sir. Understood.
Yes, we are eligible from the point of view that our products are included in the scheme.
Right, sir. That's helpful. And secondly, on the negotiation part that we are discussing with our OEM, can you tentative deadline when could that be finalized?
There is normally this price increases for the quarter, and for this quarter, so most probably the price increase settlements normally will happen mid-September or end September, when everybody is under pressure to close the quarter.
Right, sir. And my third question is regarding the movement in scrap and electrode prices for Q2 and what it stands currently.
So currently the prices of graphite electrodes, I think 275. Singla, correct me if I'm wrong?
Yes, sir. Presently it is 275.
So and this is for delivery in March, right? No. Current deliveries, huh? No, I think the close current deliveries now.
Yes.
So 275 is the current price. And shredded scrap is about $535, $540.
Yes. Thank you, sir, and all the best.
Thank you.
Thank you. The next question is from the line of Ritvik from One Up Financial Consultants. Please go ahead.
Hi, good afternoon, sir. Great set of numbers.
Thank you so much.
Sir, I had a few questions. Firstly, in previous con calls, we have mentioned that we have sent our samples to Aichi and their customers and awaiting feedback. So, is there any update on this? Have we got?
No, we will not be sharing those updates. The samples will keep going because there are so many parts to be changed.
Mm-hmm.
So every quarter the samples going for more customers. The number of inquiries coming is huge.
Okay.
So we will not be able to cope with the inquiries. It is that big, the set of inquiries.
Okay, sure.
So because not only Aichi, there are other customers as they have come to know that Aichi is with us. There are other customers who are buying from Japanese sources are sending us inquiries to shift to us. And you should all be aware that China has put export tax. So earlier there was an incentive to export. First they removed that incentive, then they put some export tax. So clearly the disadvantage India had vis-a-vis China is going to gradually disappear.
Sure.
So we are being swamped with inquiries. and our people, we are strengthening our R&D department and our export department to be able to handle this.
So it is not only IT, other OEMs are also approaching us.
Yes, but then again, you see, because of the political situation in terms of who Toyota competes with and so on, there'll be friendly companies and not so friendly companies also. All those things happen. So for export business, we consult with IT before we we respond to inquiries.
Sure. And sir, second question is on the capex front. You mentioned in your opening remarks that till the end of next calendar year, we will be receiving shipments of machineries for the expansion of capacity. So would it be fair to assume that by FY23 end, we would be up and running on the 280,000 ton rated capacity?
250,000, around that we should be up and running.
Okay. We'll be by the end of FY23.
Correct. Yeah.
Right. Okay. So assuming that most of the capex would go for this, would it be fair to assume that this incremental capacity would come at 75 to 100 crores of capex?
No. We have said that the total capex is about 200 to 250 crores, which is a comprehensive, which is an amalgam of many things. It includes the capex for expansion. It includes equipment for R&D. It includes equipment for safety, and equipment for environment and normal replacements. It includes all these.
Okay.
And we're going to shift our bright bar. So there's some investment for our bright bar, which will not increase our capacity, is also included in this.
Okay. Sure. And sir, you mentioned that our EBITDA per ton conversion margin will be between 7,000 to 9,000, and at the upper end given the current market scenario. So would it be fair to assume that this 12,000 rupees per ton in excess that we did in Q1 would incremental about 9,000 would be purely because of inventory gain?
Partly, very difficult to say all those figures. You see, these are all broad numbers. We don't look at exactly how much is because of inventory gain, how much is because of that. Very difficult to say all those things. These are broad numbers to look at our company's performance.
Okay.
But yes, we have clearly said a 12,200 kind of EBITDA per ton is not a long-term sustainable number. Please judge us from when we get beyond 9, if we get 9,300, for example, in a particular quarter, please don't say 300 is because of inventory gains and 9,000 is because of performance. It's very difficult to allocate these things. This is giving you broad range.
Okay. Sure, sir. That's it from my side. All the best and thank you.
Thank you.
Thank you. A reminder to the participants, to ask a question, please press star and 1. The next question is from the line of Bhavin Chera from Enam Holding. Please go ahead.
Yeah, good afternoon, sir. Congrats on good set of numbers and strong momentum.
Thank you.
So wherever you are getting the OEM approvals or supply, are you replacing, are your products import substitute, or you are one more supplier to already what Tata Steel or JSW may be supplying to these companies? Who are the competitors in your production?
So neither Tata Steel is a competitor nor is JSW really a competitor for us. Our main competitors are Mukand, Sunflag. These would be our main competitors. In some cases, Kalyani. And in some cases, one or other company. So, but main competitors really, where we compete coming up and across them are Mukand and Sunflag.
Sure. And it says that you eventually are targeting close to 3 lakh tons or by 25 or so. So don't you think that you have a much more scalable opportunity beyond this, and this number looks too small in overall scheme of things in steel industry? And also specialty steel, because government is talking of very big numbers in specialty steel when they announced the PLI scheme. So are we conservative in our growth forecast?
No, we are not conservative, but you're also right. So see, what all we are saying is based on this current location and this current plant. This current plant, even this 280,000 tons is a stretch. Whether we'll be able to achieve that or not is difficult to say. Okay? So this is a stretch in the existing plant. To answer your question, is this being conservative? Yes, as an overall opportunity, the opportunity is much bigger than this. And we have started thinking of what next after this. But as of now, those items are under only thinking stage. And we have already said publicly that we intend to be between a 700,000 to a million ton company by 2030. Now, by what time before 2030 will we reach that level? It's difficult to say at this point in time.
So you don't have any alternate locations, basically.
It will be an alternate location. This location has no possibility of going beyond this 280,000 tons of billet and 250,000 tons of rolling. So beyond this, this location doesn't have a possibility.
Sure. Thanks a lot.
Thank you.
Thank you. The next question is from the line of Rohan Mehta, an individual investor. Please go ahead.
Good afternoon, sir, and congratulations for a great quarter.
Thank you so much.
Sir, just a couple of things. As you mentioned earlier, you mentioned that this year would be like a year of sampling with respect to IG. So just wanted some more color from your end about what can we expect on that front?
Nothing. So there's nothing that will be visible to you. It is just we are sharing with you this is what we are doing. So it's just extra cost coming in because when you sample products, maybe you make a heat of 35 tons and 2 tons of that will go. And the remaining will either have to be remelted or wait for some time before divert it to some other customer because these are all unique grades, right?
Right.
So the sampling is heavy cost. And of course, we are examining with our auditors whether we can capitalize some of those costs or not because this is going to yield business results. It's got nothing to do with current operations. But as an investor or in terms of results, you will see nothing out of this. Next year, we'll start getting some trial orders. Then you start seeing something. But again, that's what is too small to notice. So that is why I've said all along that what you will start seeing on the bottom line will be from 23, 24, and the real benefits come in 24, 25.
Right.
And then to add to your question and the previous question the ask, so very clearly the problem staring at us in the face is we are going to have a massive capacity shortfall.
Okay.
Because our current capacity is around 80,000 tons. We are going to increase it to, let's say, 240 or 250,000 tons. That's 70,000 tons increase. And Aichi itself requires between 50 and 70,000 tons.
Okay.
In addition, which is zero currently. In addition to that, there are other OEMs, Japanese OEMs in Thailand, etc., from Thailand or from Philippines or Indonesia who are wanting material. Plus, there is growth in the Indian market. Plus, there is EVs, or demand for EVs is coming in. Some of our customers are supplying to EVs, so we have started supplying steel for the EV segment. Those are newer segments. So with newer business coming in, we are going to have a capacity problem in the next 2-3 years.
Right.
So and as a management team, we have started examining as to what are strategic options available to us.
Okay. Right. So you mentioned about the capex plans over the next 4-5 years.
Those capex plans, I think, despite that, we will have a capacity problem. So we have started thinking now as to what to do after this.
Right.
But no plans have been made, which is why we have said this capex plan is for the existing announced plan. We have started thinking about the next plans, but that is only in thinking stage. It is not even in planning stage.
Okay.
Yeah. So first it is thinking, then it will come into discussion and planning, and then it will come into announcement, execution, and so on. After having concrete plans. But I do feel that COVID has delayed these things because our partners are unable to come here. And these kind of discussions need to happen face to face. But I think 1 year from now, we will have more clarity about our next plans. So I do hope that next year, when we close the financial year 21-22, we hope to, by then, to have some clarity that we can share with our investors about the next plans.
Okay. And so would our recent environmental clearance that we've got, would it have any bearing on CapEx plans whatsoever, sir?
No. So the CapEx plans of this 200 to 250 crores includes the investments required for the environment.
Clearly. Okay.
Yeah. So all this is already budgeted and announced. That we went ahead and announced those things with the assumption that we will get the clearance.
Got it.
And we shared with the market that this is what we're going to be investing. So all the investments required for the environment clearance, let me rephrase that. All the foreseen investments have been is part of this 200 to 250 crores.
Okay. Got it, sir. So just one last query about our debt situation, which is we've repaid a fair bit of our working capital debt. So will we be needing any more funds as such? Will we need more for that in the coming quarters, or can we expect a similar level of short-term debt?
No. The total net debt equity for the company, the net debt in the company was about 130 crores in the year ending 31st March Q1. Ingla, am I correct? 130 crores?
Yes, sir. 130 crores.
Yeah. So there will definitely be an increase at that level when we end this financial year, for the simple reason that the capex would have happened. 1, 2, the scale of operations is going to be bigger. Last year we did 150,000 tons. This year we are saying 165 to 175,000 tons. So there will be a bigger volume and therefore bigger finished goods inventory outstanding will be higher. And 3, because the price increases, the per ton value of inventory, per ton value of outstanding is going to be higher. So very clearly, the capital employed is going to be higher at the end of this financial year, and therefore the debt figures will be a bit higher. But we are very clear for now, the net debt equity will be definitely below 0.5 for now.
Yes, sir.
And with the current plans as foreseen, the current announced plans, we expect by 2025 or 2026, we should be a zero debt company.
Zero debt company.
With, again I'm repeating, with the current foreseen plans.
Fair enough. Got it, sir.
Yeah.
Got it. All right. Thank you so much, sir. That was all from my side. Thank you so much, and wish you all the best.
Thank you so much.
Thank you. The next question is from the line of Urval Bhatt from IIFL Securities. Please go ahead.
Hi, Sachit. Thanks for the wonderful explanation as always. Just a couple of questions. One bookkeeping question. You mentioned that the target plan is around 200-250 crore capex over the next 5 years. So just want to understand, should we build around 50-70 crore would be the run rate for the next couple of years?
No. The larger part of the investment will be done by the end of next year.
Okay.
So the first 2 years will be front loaded. First year will be lighter. Second year will be the heaviest. So this year we'll expect between 40 to 50 crores, Singla.
It will be 30 to 40 crores, sir.
Yeah, so about 40 crores, let's say, this year. The second year will be far higher. The second year will be very heavy.
Yes.
So second year would be around 100, 120 odd crores?
We haven't got those numbers, but second year is going to be this year. Then third year would be little less. Fourth year will be little. It'll scale off.
Understood. Understood. That's helpful. And also, on the working capital side, what kind of increase have you seen in terms of inventory? Just because of the pricing efforts, price have increased significantly, and you are still negotiating for another price hike. So should we expect a further increase in working capital in the coming quarters?
Yes, that's right.
Okay.
And please, in the quarter by quarter, you see, because we are building up inventory for a shutdown.
Yeah, correct. Understood.
That is why we are saying for the year end.
Understood.
For the year end, we expect our working capital figures to have gone up.
Understood. That makes sense. And also on the expansion side, if you can...
just give a guidance. Last year, our net capital employed was 600 crores.
Yes.
So I would expect roughly 10 to 15% increase in the net capital employed.
Yes.
Could be around 10. Let's say around 10%. Very rough idea, but around 10% increase in the net capital employed.
Understood.
As of now, that is our forecast. That may change, but as of now, that's the forecast.
Understood.
Again, Singla, please correct me if I'm wrong.
No, this is correct.
Okay, thank you.
And one more follow-up question on the capacity expansion side. What kind of a product mix are we envisaging, and how will that impact our overall margin profile once we reach full utilization levels in 23?
So the products are similar. These are products for cars. So the big change will be the proportion of cars will increase in our product mix significantly. Today, cars and two-wheelers are almost similar. So the large part of the increase is primarily in cars. So that's one. And two, the grades are very different because Toyota uses very different grades and specialized steels. So that's the second part. And third, we have already said that we will expect this range of 7,000 to 9,000 rupees per ton to increase to 10,000 rupees a ton.
Understood. That accounts for the improving margin, improving product profile. Yeah.
And once those products stabilize, you see, because there's also a cost for them to stabilize, it takes time to stabilize, we would then expect at this point in time, this is just a rough forecast, we would like to target as a management 10,000 to 12,000 rupees EBITDA per ton.
Understood. That's all from my end. Thanks.
But this Urvil, we are talking of about 5 years from now.
Yeah, I understood. It's around once we start delivering to Aichi and once they...
Yes. There are lots of ifs and buts between. Provided we reach the right quality level, and then provided the rejection levels internally are not so high, and there are lots of provided.
Yeah.
But this is what I'm sharing with you as a management, that's what we're going to be targeting. So, as you've seen also, we have been steadily increasing our forecast. For a long time, we were between 4.5 to 6. Then we increased the forecast to 5 to 6.5. Then we increased the forecast to 6 to 8. We've increased it further to 7 to 9. And now we are saying 10. And then we are saying 10 to 12. So we are increasing our volume and increasing our margin. And third, we are also working on our capital employed, so which is why we are targeting an EBITDA on capital employed of crossing 25%, which means an ROC, EBIT on capital employed, of about 20%.
That's helpful. Thanks, Achut.
Yeah, thank you.
Thank you. The next question is from the line of Monu Sehgal, an individual investor. Please go ahead.
Hi, Sajid. Congratulations. Just quickly wanted to check, you mentioned the China impact on the industry as such. Now, when you had guided for these EBITDA numbers, I don't know if that was taken into account, whatever structurally it will change the industry. So do you think there is a risk to the upside to your guidance of 7 to 9,000 because of the structural change? And
Go ahead, please. I interrupted you by mistake.
Yeah. Secondly, although alloy steel perhaps may not be one of the impacts on the price structurally, but given the other companies can substitute the product, this may have an impact on structurally higher margins for this one as well. And second, the last question is whether acquisition of a plant is also in the realm of things that you're thinking about.
So to answer your first question, there is no direct impact of alloy steels in India from China, at least in our product segment. Okay, so really we see no direct impact on our current business. Where we do see an impact is in the business in Southeast Asia, in Thailand, in Philippines, and Indonesia, where the main players are Japan, Korea, and China. So, and China was the least priced competitor. As Chinese prices go up, the floor prices will go up, which means the attractiveness of the export customers is going to be better than before, than what we assumed. So, in that sense, yes, that will be a benefit to our new business, which is why for the first time today I have used the term 10 to 12. So, in a sense, I have indirectly put in the impact of China that we will expect a higher range of 10 to 12,000 rupees EBITDA per ton as we stabilize the Japanese business. Yes, so this is as far as the first part is concerned. The other part you said is that another impact could be as domestic steel suppliers, some of the large players like JSW, JSPL, Tata Long Products, even some people like Sunflag, can convert to other products and export those products because Indian prices are much lower than international prices and therefore create a shortage of alloy steels in the country. Yes, in fact, that factor is already playing, which is why we have got higher pricing, good price increases from the customers. And you are already aware that even today the HRC prices from Indian HRC prices are lower than global HRC prices. So that means there is still headroom for HRC prices to rise. And if those prices rise, then as demand picks up, then you will see even possibility of domestic price rise also. So if that happens, clearly this range of 7 to 9,000 rupees will get breached on the upper side.
Sure.
But very difficult for me to forecast those parts. But if that happens, clearly it is likely to be breached on the upside.
Sure. I think that's a factor to look out for, perhaps.
And the third question that you said is an acquisition or something on the cards. As I said, nothing is on the cards, but in the thinking stage, very clearly we need capacity. And very clearly, again, an acquisition is the fastest way to put up capacity. But an acquisition is fraught with its own dangers. One, it will not be in a state that you would want to be in. Two, the culture will be very different. And three, will you find somebody who already has approvals and who's willing to sell? So there are not too many players in the country. It's not that you can just buy a steel plant and convert it to an alloy steel plant.
Sure.
But if an opportunity comes, we will be open to it.
Sure, thank you.
Thank you. The next question is from the line of Rohit Ohri from Progressive Shares. Please go ahead.
Hi, sir. Just one question or maybe a clarity. You seem to be cautiously optimistic on the business, which is quite evident from your commentary as well. And the promoters are slowly nibbling into the shares, and it has gone up from 59.78 to around 60.87 from December 2022 today. So my question is, with these capacity problems which you have alluded already, and the demand which is there in the market with just 4, 5, or maybe 6 key players or some new entrants that might come. Don't you think that the guidance has to be raised from 7,000 or whatever it is, 7,000 to 9,000 to slightly more than what it is currently?
Hello, sir. Ladies and gentlemen, please stay connected. The line of Mr. Jain is disconnected.
Yeah.
He is connected back. Thank you, and over to you, Mr. Jain.
Yeah, go ahead. Sorry, you were asking me a question and the line dropped in.
So I was asking that with the cautious optimism that you're showing and with these demand constraints that are there, don't you think that you should be increasing the guidance from 7,000, 9,000 to slightly higher? Because knowing that there are just 4 or 5 players or maybe some new entrants that might come in the business. So don't you think that the guidance has to be improved in the current scenario?
Difficult to say, you see, because there are so many variables just now on which we don't have a handle. Because currently we are negotiating for a price increase. If we get a good price increase, we have asked for we've asked for a price increase of 7,000 rupees a ton. If we get 6,000 to 7,000 rupees a ton, second quarter will be a blockbuster quarter. But will we get 6, 7? It's very difficult to predict the kind of price increase we'll get, no? Because this is not a commodity business. This is a negotiated business. And today the auto sector is not booming in terms of, like as last year, there was shortage of material everywhere. It's so very difficult to forecast that. And to the other part of the question, yes, not promoters in general. I personally, in my personal capacity, I have been increasing my stake because any liquid funds I had, I was investing in buying our shares. But then I reached a particular level where this is a totally disproportionate amount of my personal liquid funds available. And the problem of markets is when promoters is buying the shares, it's all a positive. But tomorrow if I need some liquidity and I need some money and I sell some shares, it is seen as a negative. So for now, I don't think I'll be buying any more shares. So for the moment, let me share out here, it is highly unlikely that there will be a major change in the promoter shareholding because I was buying in my personal capacity only, and I would like to now diversify my small surplus funds into other investments that I can sell, liquidate if I need money.
Okay, so that was the only question that I had. Thank you.
Yeah.
Thank you. Ladies and gentlemen, this was the last question. I now hand the conference over to the management for closing comments.
Ladies and gentlemen, thank you for being here with us. The last question, of course, I should have answered it there and then, but we remain cautiously optimistic. And frankly, if you ask me, I would like to give a higher guidance than this. But then the problem is there are also small investors who invest based on management comments and so on. And we must understand it is a risky business. And so 7,000 to 9,000 rupees that we talk about, we are fairly sure will be within the range. In this year, can we exceed 9,000? I probably think we will exceed this. But as a guidance, I keep repeating, please don't invest in our company from a short-term point of view. Please invest in our company from a long-term point of view, and a long-term to give a guidance beyond 7 to 9 at this point in time with current factors in.
आपण ज्या व्यक्तीसोबत बोलत आहात त्या व्यक्तीने आपला.
So thank you so much for being with us, and I hope to very soon physical meetings happen and we have a physical conference in Mumbai sometime. Thank you so much.
Thank you. On behalf of ISL Securities Limited, that concludes this conference. Thank you for joining us, and you may now disconnect the line.